What's up, everybody? Welcome to the Stocks channel. Today we had a very strong bounce off of the very critical support levels, which begs the question, are the bulls back? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today, SPY was up a whopping 1.43% with that very solid bounce off of that support zone that I told you to pay very close attention to because we are in a powerful bull trend. There was no reason to get bearish unless price action broke down below that level. I told you if we bounce from that level, we would go straight up towards 475, and that is exactly what we did today. On top of that, in bank trade alerts, we had a massive 5% day today, and I told you during my weekend technical analysis when we were looking at weekly charts that if you're going to be a trader, your benchmark is beating a money market that is going to make about 5% this year. And in just one day's time as a trader, we have already made 5% in a single day. Now, obviously there are risks with trading, but I am telling you right now, I am very confident we are going to absolutely destroy the market this year. And I think it's going to be one of the best trading years we've seen in a very long time. So if you want to come crush the market with us, you can come join us and get all of your alerts as well by simply clicking on the link in the description of this video to join Bank Trade Alerts. So jumping back over to SPY, we obviously bounced from this support at 467, and that is going to remain critical support. And going into the rest of the week, you need to watch these resistance levels above at 475 and the previous closing high just below 477. And as I continue to tell you, there is a very good chance the SPY is trying to break out to a brand new all-time high because we've already had a brand new all-time high in the Dow Jones and the triple Qs. So I really don't see too many reasons to be bearish. If anything, you should be more than neutral, but it's definitely still a bull trend that is still bouncing off of support levels and likely trying to make brand new all-time highs. Obviously, anything is possible, so always pay attention to these critical levels that I give you. And I always tell you, you should be prepared for any scenario. And one of those scenarios is that we do reject from a lower high and come down here and slice through 467. If we slice through 467, I do believe we're coming down towards 458 to 460, which is also that rising 50 EMA. However, while we're above 467, go ahead and stay bullish because we're likely going higher. And as a trader, feel free to lock your profits as we hit resistance zones, and you can always buy more if we break through that resistance and turn it into support. So get in the habit of having patience and being disciplined in following your trade plan, and make sure your trade plan is prepared for any scenario. We are traders. We couldn't care less where the market goes. We simply want to be profitable and be on the right side of the trade. So block out all of the noise, whether it's bearish or bullish. We know this is a bull trend, so right now we want to continue to try to make bullish trades until we lose a critical support level and lose the bull trend, and it's really going to be as simple as that. On the NASDAQ 100 triple Qs, we were up 2.07% today, and if you're a bank member, you had a great day because of that. And we really just had a textbook bounce off of a very important support zone, which was that critical level at 396. I told you at 396 it was possible we bounced back up towards 404, and that's exactly what we did today, and we actually closed above it, which increases the probability we can come up here and close this gap above 407. The exact number for the gap fill is 407.58. And if the bulls cannot close that gap tomorrow very early in the trading session, that is going to be a very early warning sign that we could get a lower high and a rejection to lower prices. So manage your risk right here at the breakout at 404. If we blast through that gap fill, we go back up to retest the previous closing high at 411 and the brand new all-time high at 414. If we can't hold 404, look for a retest of 396 or possibly a higher low off that level. And if we break 396, look for the retest of that very critical breakout at 391. That is also the rising 50 EMA, so that is going to be the next critical support if we can't hold this one. So again, textbook bull trends across the board, so don't get bearish unless the price action tells us to. On the Dow Jones, we were up 0.59% today, and the Dow Jones bounces off the rising 20 daily moving average, which again is textbook bull market behavior, bouncing off of the moving averages that define the strong bull trend. And we're right here knocking on the door of the previous all-time high at the closing high at 377. And if we break through 377, I think we're going in this zone above between 380 all the way up to 391. So there will be a very critical resistance zone as we approach new all-time highs in the Dow Jones. So even though I do think we're pushing higher, as we approach these higher levels, do not be scared to take profits because this is where the market is likely going to start going through some type of distribution. Brand new all-time highs are obviously bullish, but nothing goes up in a straight line forever, so there will be periods where you want to be a lot more defensive. And as we're breaking out, those are great times to lock profits as you sell into the people that are getting FOMO. The disciplined trader is the one that buys low and sells high, And the FOMO trader is the one that chases everything they miss just to get a pie in the face as the market reverses and goes lower. Do you want to be that smart money trader that's making money, or the dumb money trader that's chasing everything they missed and losing money? If at any point we slice down through the support at 373, that's a bear breakdown and we're likely coming back down towards 370 and then 367. On the Russell 2000 IWM ETF, we were up 1.8% today, and I told you the small caps would likely bounce from this zone between 190 and 192 and come up here towards the resistance at 197 and the gap fill just below 199, and so far that is playing out and we're very close to filling that gap. If we do not fill the gap and we get rejected from 197 and we come back down and slice through the support below, that is going to be incredibly bearish, and that could tell us we're coming all the way back down into the 180s. So manage your risk right here at the bounce at 192 or this support right around 191. And if we break that, there's going to be one last critical support right there at the 50 EMA and support trend line right around 188. However, we did bounce and we are going higher. So if we break through that zone at 199, we're going back up towards 203 and then 207. On the ARKK ETF, we were up 2.82% today as we did bounce off support at 48 and we did fill the gap at 50.22, which is exactly where we were expecting to bounce to. And if we continue higher, we need to break through the resistance at 51. Above 51, we can go to 52.3 and 54.6. And I did weekend technical analysis on the ARKK ETF. So if you are a trader of this stock, you should pay attention to the weekly chart as well. If we break down below 47, we're likely coming back down towards 44 to 45. On the VIX, we were down 2.02% today as the VIX is starting to crush yet again, making a new low from Friday's close, which means we are seeing fear leave the market, which is more indicative of a bull trend and more indicative of a market that wants to climb to brand new all-time highs. If at any point the VIX bounces and starts breaking higher, that's going to be your warning sign that fear is picking up and we could start to see high volume panic selling. On Bitcoin, we're up over 7.3% and we are going exactly where I expected on the breakout, which is this price target at 47,500. If we break through that price target, we climb higher towards 50,000, but do not expect it to easily break as we are starting to get a lot of choppy price action. We need to see a clear break of this resistance before we get overly bullish. So from this breakout, congratulations, you had a very successful trade and I would consider locking lots of profits right here at this price target. You can stay bullish above 44,500, and if we break that after a rejection from resistance, we've likely seen a local top. On Nvidia stock, we were up 6.43% today, so this stock remains a very powerful bear killer with a very strong bounce off of that support at 475 and a clear break of the range high at 504. So without a doubt, the arrows that I gave you favored the bulls above 475, and I told you we would likely go straight to 504, and that's exactly what we did today, and then some. So we can delete the bear arrow and we can laugh about that arrow now. And now that we're above 504, we are likely going on a very powerful bull run. And while I do not like putting limits on powerful bull runs, I do believe it could be heading towards 600. However, we need to play it day by day and level by level. And right now we have a huge bullish candle on increasing volume with a very powerful bull breakout, which means your risk level is now the breakout at 504. Above 504, we can push to 532 and even in the 550s, and I just got done telling you I think we could go all the way to 600. That's going to take time and we need these Bollinger Bands to expand, so if you're bullish on Nvidia, you want to be looking to buy at the breakout retest between 504 and 513. Do not short this stock. I can't say it any other ways than just don't do it. There's plenty of bad stocks in the market you can go short, and this stock is not one of those stocks that's a bad stock, so stop trying to short it. I can't stress that enough. On Tesla stock, we were up 1.25% today, and I still think Tesla below 244 is looking very vulnerable, but it doesn't mean it can't break back above 244 and prove me wrong. We are developing some bearish trending, and we can't even get back over the 5 EMA. So below 244, I still think there's a good chance we're going down towards 230 and the gap fill at 225. If I'm wrong, we'll break above 244 and prove me wrong, and then above 244, I'm looking for 255. On Apple stock, we were up 2.42% today, and I told you I thought Apple was going to bounce between the zone of 180 and 182 and easily go fill the gap at 183 and likely push all the way up towards the gap fill and retest zone between 190 and 192. So obviously this gap at 183 is filled, and we did break above this resistance zone at 185, and if we continue higher, we're looking for resistance between 188 and 190, and then above that we fill the gap at 191.73. If at any point we break below 180, just simply get risk off because that's extremely bearish and you shouldn't be trying to buy something that's bearish. So jumping back over to the S&P 500, this without a doubt was telegraphed, and I told you last week during the analysis, look for a potential bear trap here as we were getting low volume at critical support within a very powerful bull trend. So we had the strong bounce today and we're dealing with some critical resistance levels above, but just because we have critical resistance doesn't mean we can't break through them and go to brand new all-time highs. This is a bull trend until it's not, which means this will remain a bull trend until it rolls over and dies. And if it rolls over and dies, we're going to see it in the price action. Block out the noise, follow the trend and the price action, and always manage your risk around these critical levels. And remember, your job is to trade what the chart tells you, not what anybody else is saying or anybody else's opinions. So do yourself a favor and block out everybody else's opinions. And yes, that even includes my own. I will give you what I think and what I see on the chart, but at the end of the day, it's your job to read the price action at these levels and you decide exactly how you should be trading it. Your job as a trader is to remain profitable, manage risk, and continue to try to stay on the right side of the market movements. And right now, the market movements remain bullish, so remember that and put that in the back of your mind when you're trying to short the market yet again. Do not do it unless there is a very good reason to. As I said before, and I said many times, we are going to absolutely crush the market this year in 2024. So if you want to come crush the market with us, you simply just need to join Bank Trade Alerts, and you can find out how to do so in the description of this video. If you want access to all of my intraday updates and analysis throughout the day, you just need to join the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.